Good morning. Good morning. Hope everyone out there is doing well. We're going to get this episode of Back to the Futures started with me, Markets, and Mayhem. And got a lot of ground to cover, a lot of fun stuff to look at here with Bookmap. And this is always fun for me because there is a lot of depth to Bookmap. There is a decent learning curve, but the nice part about that is that there's also a lot of exploration to do. And there's a lot of value for this product as you get into it and figure out more ways you can apply it to trading futures, to trading ETFs, to trading stocks. So let's quickly get through the risk disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. And the Bookmap team would love to have you join us on their Discord here. You can go to discord.com/invite/bookmap or use the QR code on screen to join the community, to be able to check out the content that they have, their contests and events, and a lot of educational content for people to take advantage of Bookmap and learn more about it, sort of like the stream that we do every Tuesday at 9 a.m. Eastern. A little bit about me. My trading journey began in 2005. I funded my own account. I began trading stocks, then moved on to options, futures, commodities, and Forex as I expanded my horizons. And in 2006, I began rolling my profits into long-term investments. And this is a huge part of my success as just an entrepreneur, as an investor, as a trader, was knowing how to balance things out. So I would take those trading profits that I was fortunate enough to make, and I'd roll them into investments in stocks, in real estate, in businesses. And that helped me to diversify so that no matter what the market was doing, no matter how I was trading, I was able to have other sources of income and capital appreciation. And I recommend that. I know a lot of folks out there have a hot hand. They're doing great. That's fine. But it's not always like that. Sometimes the market's a bit like an ocean. You know, you have high tide, everything's great. And you have low tide, things get a little more difficult. Right now, we're at the highest of high tides, and a lot of boats are out there floating. The waters are moving higher. Liquidity is ample. But when low tide comes, you want to be prepared for that. So think about that diversification. The reason I mention that is one of the interesting components of my journey, about 20 years of trading now, was navigating through the great financial crisis, which helped me to better appreciate the importance of understanding how all these things come together. The fiscal policy, monetary policy, earnings, the technicals and momentum dynamics, sentiment flows, and positioning. You know, I came into that just being a technical trader, and I came away from the great financial crisis knowing that I will be a perpetual student of trading and investing and finance in general, because there's just so much to learn. But that's one of the best parts about it too. You don't want to rush this journey. It's a marathon. It's not a sprint. Prepare for that. Pace yourself accordingly. So having been through all that, my approach has become much more systematic in nature, driven by momentum, price action, options flows, sentiment, positioning, volume profile in the big picture. And I systematize this the best I can. I build models so that I can evaluate risk and opportunity dynamics to try to set up my trades on various time frames. And I build and backtest my own models and systems to trade futures, Forex, options, stocks, and commodities. I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. And we'll get into that in just a little bit during the demonstration here. And I also began building tools for Bookmap not too long ago, including the SPX Options Visualizer, which we'll show just a little bit later on as we get into the live trading stream. I co-founded TraderAid in 2022 and Macrovisor in 2023 to share my experience in trading and investing respectively, ideas on market opportunities, and education. I also build a number of unique tools and models and provide one-on-one coaching for traders and investors. Now, let's discuss why I watch Orderflow, because I've heard mixed opinions from folks about this. Some people say, oh, you can't really learn anything from Orderflow. Other people swear by it and say it's the only thing you need to look at. I am in the middle. I think it's all contextual. It's about where are you looking in the order flow? Are you finding the signal within the noise? And is that helping you better determine how you may take trades, manage your risk, manage your execution, where to get out, things like that. I find Bookmap really helpful for that component of really understanding where this order flow is happening in the microstructure, in the intraday dynamics of futures and stocks. So when I'm doing order flow analysis, I'm looking for differentials, or what we call deltas. That's really one of the big things that Bookmap lets you key in on at a glance. Whether you're talking about the volume bubbles, which are deltas, the delta volume bars that you can set up on the bottom, the deltas in the session volume profile that you can set up. It's delta, delta, delta. You're looking for the differences, the mismatches sometimes between buyers and sellers, and even some of the signals that I've generated are built off of deltas, like these exhaustion and absorption indicators. I also like to look at stops and icebergs, because you'll start to see sometimes situations where things get a little imbalanced. So we're looking for that large flow. In the icebergs, it's that large passive order flow. Let's say a really large trading desk is getting involved. You have this powerful rally, but they keep just iceberging sell orders overhead by the thousands, and you start to see the rally, slow down and then reverse, and then it really starts to move lower. That can be a big initial sign. The icebergs aren't a timing signal, but they're a signal to look for momentum to shift, because if momentum shifts in the ways that the iceberg suggests, then that could be some of those bigger desks taking some of those profits, maybe even building short positions into what could later become a flow-driven reversal, right? If you're a buyer and you see someone dumping hundreds of millions of S&P on your head, you're not going to necessarily just keep buying with the same vigor. You might start to say, well, I wonder what they're seeing that I'm not. I'm going to pause there. And the algos are already programmed to do the same thing. When you see all that passive flow coming in overhead on a big up day, or under us on a big down day, because it can mark the other side, a reversal from the lows, algos, other flow traders notice, and we start to parse that and look for the opportunity to take the other side of that if we start to see price reverse that momentum. And I also like to look at order flow for exhaustive trading action when one party gets more offsides. And that can happen with these stop outs. It can happen with these really large sets of absorption and exhaustive types of buy and sell events. So having a sense of what order flow is doing for me as a short-term trader when I'm day trading can be very helpful to understand where there's opportunities and where there's not, because the other part of trading, whatever your time frame is knowing when not to trade. In fact, I'd say that's one of the most important parts of trading, because a lot of people get chewed up over trading, looking for opportunities where the probabilities may not be on their side, but also kind of having this sense that I need to have my skin in the game. I need to be involved with the market no matter what. And I would argue usually that mindset's going to get you in trouble. That sort of perpetual fear of missing out or not feeling involved. It's much better to be more of a sniper and look for those opportunities, take them, seize the profit, and move on. Or if you get stopped out, accept that and move on to another trade. So why do I use Bookmap for my order flow analysis? I've looked at a lot of tools over the years, and it's interesting because in 2022, as I was at a point where I wanted to get more involved with day trading again. I had been doing a lot of swing. I was picking up, looking at the latest and greatest tools that were out there. And we connected with Bookmap, our team at TraderAid, and we were really impressed with what we saw. And we were able to basically create a business partnership between the two companies. And that was built on the idea of being really impressed with their software, about how it helped me to learn more about what was taking shape in those intraday dynamics to set the tone for price action. So I feel like for my own trading and for a lot of the other short-term traders I know that use Bookmap, it brings it all together in one view, which is really helpful. You don't necessarily have to have, all these different charts going. I mean, obviously, if you're zooming out to longer time frame, that is a helpful separate chart to have that you can review maybe once a day. But for Bookmap, it's going to be much more drilling down into the detail, the powerful visualization capabilities, the ability to view key data on one screen, as I was saying, and easy to layer on new features. As I've mentioned, I've built several add-ons for Bookmap, some of which are exclusive to TraderAid members, and this has helped me to better navigate the order flow of what's driving the market and how I may be able to capitalize on it. So let's talk about some of the things leading into today's trading day. We're just about 18 minutes away from the market open. We've got some key levels in the S&P 500 cash index to watch here. A call wall at 6,100, the gamma flip level at 6038, and the vol trigger at 6,000, and then a put wall below at 5,900. Now, why do I mention these? Because we're kind of trapped in a range right now. And the upper end of that range is that call wall. The lower end of that range is that vol trigger. You could be kind of bouncing up and down in this range. Last week, we were very trapped by all of that options exposure. This week is setting up to be pretty similar unless we get some kind of surprise from the Fed tomorrow, which is not terribly likely. We know the Fed doesn't like to surprise. We also know Fed meetings have become less and less of volatility catalysts. The last one was a real sleeper, but nevertheless, that's the big potential event volatility catalyst that the market is hedged into this week. And if that doesn't deliver, then it's probably not until after options expiration and into, the weeks ahead that we see more free trading ranges. Why do I mention that? Because that's what we're really looking for. A lot of the time when we're trading intraday, we're looking for a market that has a trend we can capitalize on, not necessarily doing as much mean reversion trading, although some folks love doing that and more power to you. I'm more of a trend trader. Excuse me. So I like to look for days where you have a defined trend that you can capitalize on. But, this is a market that's much more into mean reversion. Right now, we're sort of mean reverting to about 60.50. That's another big magnet level on S&P cash ahead of the market open. So 6,000, 60.50, 6,100, those are levels to watch, as is 5,900 below and that gamma flip at 60.38. If we move meaningfully below that gamma flip, as we can see on this chart, the impact of negative gamma on pricing dynamics becomes more intense. Okay, so that basically means the deeper in negative gamma you go, the more you have a chase dynamic. Dealers are likely to buy rips and sell dips. We're in positive gamma as of yesterday's close, that, and not by much, you can see, but by enough to have some impact on dealer hedging patterns. That means you have some volatility compression. Dealers are selling rips, buying dips. That tends to reduce some of the intraday price discovery or realized volatility. So just something to think about in the context of these levels, what they may mean for our trading dynamics. Obviously, we have a much better chance of breaking free of this range if we can get above SPX 6100 or below 6,000 on a closing basis. And for those out there that are keeping tabs, the delta as of yesterday between the March 2025 S&P 500 E-mini futures contract and S&P cash is about 75 points. So you could take all these levels, add 75 to them, and you've got your ES levels. The next one you might want to take a screenshot of is just the pivot levels to watch for today's trading session. This is based on the dynamic pivots that I've created for TraderAid that's available on our Discord. These are based on where people have wanted to trade, not wanted to trade, where there's been price action and the lack thereof. So this is something that is worth watching because typically these levels get some interaction. And if we push through them either below or above, you get generally some continuation often to that next level. So these are levels just to take a screenshot of. They're mostly for today's trading day, because they're based on, the days leading up to today and where we've seen that price action and volume transacting. And then I wanted to, before we dive right into Bookmap, share a couple of deals with you. You can bookmark this for later if you want, or take a screenshot. But we do have an exclusive offer with Bookmap, having been partnered with them for just about 3 years now. We've got a 40% off deal you can take advantage of. Just visit traderaid.com/bookmap, scroll down to the special offers, and you can see those deals. We also have a promotional rate on our SPX options visualizer of $39.99 a month throughout 2024. So if you lock that in, you get it for the life of your subscription. And then as we get into 2025, that rate will be increasing, but only if you haven't already locked it in. If you already are on a plan this year, you'll get to keep that rate for the life of your plan. So let's go ahead and go right into Bookmap here. We can see on screen, I've got it set up right here to use candles, and we're going to go through a couple different views. We're going to talk about several different ways that I have things set up here, so that depending on how you may want to use Bookmap, potentially for your own trading, you can kind of look at it and set something up similar to this if you'd like. So on screen right now, I'm using a plugin for Bookmap called Trader Map Pro. And the reason I'm using that is because we have this really annoying bracketed algo that just sort of hangs around price. You can see that on this chart, and you can see how it's much less pronounced. It's pretty much gone on the filtered chart. Now, for folks out there that are kind of looking at Bookmap to get a sense as to where there's interest in price, which is one of the key advantages of the heat map, you're probably going to want to consider using this or Trade Map Lite. Okay, so Trader Map Lite allows you to do the same sort of filtering, but it's a little more limited. So it works only for ES, NQ, MES, and MNQ futures, and they have 3 levels of filtering. So it doesn't quite give you the same level of granularity, but it works quite well, provided you're not moving over some of the other functionality to your charts. I have a little bit more going on, so I use Trader Map Pro so I can map over my icebergs and stops and some of the other data. And then I put it on a pretty high sensitivity for NQ and for ES here, because I've noticed, especially around contract roll, you've got to do that to get rid of all the sort of algo bid that's bracketing around price. But basically, it's just a matter of going into Trade Map Pro as a plugin. If you don't have as a plugin, click on the Manage Add-ons button, and you can find it under Bookmap add-ons, and you can just basically click install to install it for you. It'll be under the available for install column if you haven't yet installed it. And then once you have it installed and enabled, you'll simply select the contract that you want to set up the filter on, like ESH5.CME at Rhythmic. If you're using Rhythmic data, you'll create a custom name for it. If you're using the SPX options visualizer, my recommendation would just be to add -1 to the end, like I've done up here. So the name would be ESH5.CME-1, and it'll be red because I've already got one of those set up. But once you add that, I actually have a data feed that's available for the filtered contract as well. And, if you have questions about that or need that link or otherwise, let me know. But I like using Trader Map Pro specifically because it lets me filter out all that sort of superfluous, less than useful liquidity that otherwise is a bit distracting, because it really does kind of pull the heat map's attention to it. And I've noticed in the current version of Bookmap that now when you're loading up one of these contracts, it'll automatically detect that it has these market maker brackets, and it'll offer to set up Trader Map Lite for you pretty much automatically, which is really neat, because I had folks, in the past give me feedback saying I'm not getting the same value because these bracketed algos, and I'd suggest using Trader Map Lite or Pro. But now the program itself is detecting this and actually automatically suggesting that you consider using it, which I think is really cool. So the other thing that I do on this chart that some folks prefer, other folks do not, it depends on your preference, but I do want to show it in case you do prefer it, is I've set up candlesticks. So you can click on this little microscope icon. The tooltip will be called Studies Configuration, and you can click on candlesticks and you can set it up. I have it for open, high, low, close trades with a body width of 30 and an interval of 1 minute. And then if you do that, you're probably going to want to uncheck the volume dots so you don't have a lot of overlap there. And that way you'll have your candlestick chart, which is, for some folks are a little more used to. As you're just getting adjusted to using Bookmap, I feel like it makes sense to have the candlestick chart as maybe like a starter. But I do strongly feel that the delta bubbles offer a lot of value, because at a glance you can see where there's aggression. like this larger red bubble just stands out, shows you there's more seller aggression at that moment in time. And you can see it with the delta volume bar below as well, right? And of course, on this chart with the candlesticks, if you want to at least have the delta volume bars, that's something that you can do as well, right? You can set up the delta volume bars here, and then you can set up their width, and you'll be able to see the same data point. Like, you can't see that big red delta bubble, but you can see the red bar giving you a sense that, oh wow, there was some aggression by sellers there, right? So that's a quick and easy way of setting things up. The other thing that I always like to kind of encourage people to consider is the icebergs and stops. Just being able to see those larger sources of flow tends to be quite helpful. Knowing when there are large parties layering in passive flow that can act as a turning point, it's a good heads up to have. Like, if you're in a position and you're long and you see a really large amount of passive selling coming in overhead, and then price starts to stall and turn, that's probably a good signal to manage your risk, maybe take some profits there, maybe even close in reverse, right? So I like to have icebergs and stops set up. I also like to kind of set them up in a particular way to make sure that I'm only seeing those bigger trades, right? Because for me, I just want to glance at the screen and get a sense as to what's going on. So I'm pretty particular about it. I'll use a 30-minute standard deviation interval and a 10 standard deviation multiplier. I'll also color code both my stops and icebergs, red for sells, green for buys. And then that way, it's just a little bit easier to get a sense as to what might be important, what might be a more market moving type of event going on screen. And then another thing that I do with a free add-on that you can get called price levels is I set it up so that I'll have the highest price level and the lowest price level. I'll disable the middle price because I'm using VWAP and point of control. So I don't really need that as a point of reference, but I'm using this to monitor the opening range and really just the highs and lows of the day. So I look at the 20-minute opening range primarily. So when I get to see where these price levels are, and they'll reset at 9:30 a.m., I also get a sense as to how big that range is, which gives us a sense as to how volatile the trading day may be, how much room we may have in a trend day higher or lower, but also gives me a sense as to when we're pushing the opening range. Because the way I trade it, I like to see us, for example, on an upward trend day, see us push above the opening range and build acceptance there before pushing higher. That gives me a sense that there's a more orderly type of trend taking shape, and that also we're confirming that trend. Now, I have a question from one of the YouTubes. Which tickers can you follow with Bookmap? Is it limited to commodities? That's a great question. So Bookmap is not limited to commodities. You can actually track pretty much any US listed stock, ETF. There's a number of cryptos that you can track on Bookmap. There's a lot of different futures contracts you can track for equity indices, for bonds, for notes. You can also track commodities like you were saying. And I believe they've added a bunch of international stocks and stock markets as well. I mean, I'm on the Bookmap Discord. I see all kinds of different markets that they're talking about using with Bookmap. So I wouldn't say I'm the expert on this, but my understanding is there's a whole bunch of different global asset classes, including different global stock markets that you can track using Bookmap. So let me know if that's helpful. And if you have further questions on that, I'll pass it on to the team and get you an answer. And we're just about a little over 3 minutes away from the open here. Let's just talk about the calendar. We did get retail sales. It was a beat on headline, a miss on core, not much of a market reaction to that. Got industrial production that came in just about 10 minutes ago. That was a miss on headline, down 0.1% versus an estimate of 0.3% gain. We also had capacity utilization come in a little soft at 76.8% versus a forecast of 77.3%. At 10 a.m., we get NAHB Housing Market Index, U.S. business inventories. Then at 1 p.m., we have a 20-year bond auction. So a couple event volatility catalysts today, nothing like tomorrow with Fed Nest Day. and the potential for a 25 bip cut and an SEP report that walks back just how many cuts they were guiding for in September, which is something the market largely already expects and is being priced into short-term interest rates overall, with 3 cuts forecast by FedWatch at this point. So let's take a look around. Let's take a look at the NASDAQ here as well. And we'll zoom out just a little bit, just so we can see what happened overnight. And we can see there was a bid off the European Open a bit, got to the high of the session around 22,424.50, and then rolled over from there just around 6:30 a.m. or so. Started to see some selling pressure coming in. And kind of a different look in the S&P. Really overnight, it's just been selling pressure. The European Open didn't give the same kind of bid to the S&P. So we've noticed there's this narrowness and breadth. And we've noticed that NYSE, which was the index that was really grinding new highs pretty much for months and months, with just a couple days of exceptions here and there, we had this crescendo of new highs and then started to make new lows again. And recently, we've seen the rally start to narrow again as well recently. So all that kind of tells us, if we're looking for the strength, it's been in tech. That's probably one reason the NASDAQ had a bit of a reflexive bid this morning. But if we're looking for weakness, it's really been, in the Dow. The Dow's had, 6-7 trading days consecutively down. The S&P has also been underperforming the NASDAQ of late. Last week, it underperformed week over week. So we have seen the rally concentrate back into tech and a lot of the bigger tech names, with the exception of NVIDIA, which has been doing rather poorly. And in fact, looks like it's putting in a bit of a head and shoulders top, down this morning again. And I think this is one that does warrant looking at. Yesterday was down 1.68%. This morning, it is implied lower by another 2.3%. So that does set us up with a kind of nasty look on that NVIDIA chart below the 21-day EMA, below the 50, a death cross. You've got momentum rolling lower on the MACD histogram. And you have a bit of a head and shoulders pattern confirming there. So I would be watching this one pretty closely. It's an important gauge of the AI narrative sentiment. We have seen some of that handed off to Broadcom, which is up almost 40% over the last month. But, this is still a situation where NVIDIA is a very large market cap stock. It has a big weighting in the S&P, in the NASDAQ, in the semiconductor ETF. So we want to pay close attention to how it trades today, and particularly the options flow. On the other side of the tape, we've got Tesla. Tesla has been on a tear, pretty much doubling over the last month or so. It was up 6.14% yesterday, and this morning it is implied to open another 2.81% higher. Also got Google. Google has had a really strong run recently. We've seen some signs that it's getting a little bit exhaustive. You've seen call skew blow out on the stock. You've seen a record amount of flows into Google call options. So overall, maybe becoming a bit of a crowded trade. So some caution warranted, but some suggesting also Google just catching up with its peers here. And there has been exciting news for the stock. So it's not without reason. Opening bells just rung. Google's up just about 0.2% here off the opening bell. And S&P actually having a bit of a tumble here. One of the pivot levels that I shared with the Trader Aid folks was 61.3250 pre-market. I said if we made a push below there, I felt we had room for continuation lower. And we can see that's playing out again. This has been a tale that we've seen a couple times this morning. But every time, this was the initial push lower, we've made a push lower from this level. There's been some continuation. Now it seems like you have some more motivated selling coming in. So we do have this put wall level we'll be watching, implied by the SPX options visualizer. I think that will be an area where we may get some support. We also have the gamma flip level converted into ES terms right here to watch as we get into the trading day. And we can see that already we've got, just for the first minute of trading, we've already made about a 6-handle opening range. So it could be a lively day here. I also expect in the morning flows hedging into tomorrow. We've seen this sort of just-in-time hedging dynamic. That is to say, if everyone's selling vol, You don't want to necessarily get your hedges on too far in advance for some of the near-term events. So while we are already seeing some hedging for Fed Nest Day, I've seen a lot more trading desks wait till the last minute, and usually in the first hour and the last hour of the trading day ahead of an event vol catalyst like Fed Nest Day, you see some of these hedging flows. So I wouldn't be too surprised if we see some of that in the AM session and PM session today, which is a little liquidity negative, because those flows, when dealers are selling puts, they're hedging them by selling short futures, and that tends to be a bit of a driver of downside price action. So we'll have to see how this plays out during the day, but seeing a little bit of this pressure going into the day, particularly below that 61.3250 pivot, is to be expected. The key is one of continuation and whether we make a trend of it. So I got a question and I answered it in the text on the Bookmap YouTube chat, but I wanted to also just talk about it on voice. The question from Theo Wallace was, what are the trade setups you follow? So that's a great question. And it really comes down to, what am I looking at in the market? Like, what opportunities exist? So every week I go through and I do a lot of charting. I look for momentum. I look for different types of pre-screen setups. I look at charts and price action, options positioning, and I try to get a sense as to where there may be better opportunities, where there may be favorable risk to reward on multiple timeframes. And I share those trades in stocks, ETFs, options, futures, Forex, etc. on the TraderAid Discord regularly. I also share some of them publicly on Navigating the Markets every week. Monday evening, I do it live at 5 p.m. and then upload the recording. But for me, it's really about a couple things. Where is there an opportunity where I feel like there's enough liquidity, where I feel like there's an advantage, where the probabilistic outcome of making a profit is higher than other opportunities? And then how can I get into that and express that view? Like, where's my entry? Where's my risk out point where I'm going to stop out? And where's my price target? And so I'm looking for those really wherever I can find them. Obviously, there's limitations. I don't want to trade stuff that's illiquid that I feel like I can't easily get out of, particularly if I'm trading something on a shorter time frame. And, I don't want to necessarily get too aggressive trading on a week like this. This week is options expiration week. It's also contract expiration week, or what we call triple witching. Adding to that, we've got Fed Nest Day tomorrow, and we've got a pretty thin market because it's a holiday. We're basically coming up on a holiday. A lot of the folks that lead the bigger trading desks are out in the Hamptons already, having taken off time for the end of the year. So I would say I wouldn't get too aggressive on a week like this too. Part of my talent also relies in knowing when not to trade. And on a week like this, I'm not going to be getting too cute or too aggressive. So I'll slow my roll a little bit. I'll still look for some of the opportunities intraday and on a swing time frame, but I'll take them with smaller size and wider stops, accounting for that lower liquidity environment that we're in. And Ships says, you're a really good teacher. I really enjoy listening to you on Tuesday mornings for this Bookmap class. Thank you so much. That means a lot to me and truly appreciate it. So, I think with trading, the big thing is getting to know yourself. I have a video about trading psychology on my YouTube that I think is helpful. Um, Everyone's going to find that what they do in their trading, how they're wired, what works best for them is a little different than the next person. So that's why I don't want to get too specific about, oh, this is exactly how I do this and this and this. I'm happy to answer things that way, but I also don't want to imply this is the only way to do it, because it's not. There's a variety of different ways. Trading is both an art and a science. And some folks are much more discretionary about it. Other folks like me are more systematic about it. I tend to try to be more systematic because I want to take the emotion out. I want to take the guesswork out, and I want to be more data driven, and I want to have the data to back up what I'm doing so I have the confidence to see it through. If I'm right and if I'm wrong, to know when to cut my losses. So we are seeing some downside continuation here. Again, breaking below that 61.3250 pivot level was a key initial factor here. We talked about that on the Trader A Discord before I even started this stream on Bookmap, and I'm sharing it with you all as well because this is a level, we talked about it in the prep before the market even opened, to watch. These pivots tend to be pretty spot on because they're, again, with that systematic approach, they're programmatically generated. I'm not just staring at a chart. I actually have a system that goes through and identifies areas that are likely to be more important decision points as we go through intraday and day-to-day trading. And folks, as you're watching, you are encouraged to ask questions about anything that is top of mind. And the NAHB housing market index numbers and business inventories both coming up at 10 a.m. probably won't be big market movers unless there's sort of outlier data that surprises to the upside or downside meaningfully. So that I wouldn't look at these as like big event vol catalysts, but I would say that with the tape being somewhat thinner, they could still kind of cause things to get a little shaken up just before, during, and after those events, because you see the market makers pull back even more on their liquidity. You'll see the order book lighten up quite a bit, and that means that you have more potential for slippage, you have more potential for less ideal fills and execution. So just be careful trading around those event vol catalysts, even if it's not a big deal kind of catalyst like these. Doesn't mean you want to get too cute with it because we're on a thinner tape as it is, and it gets even thinner just about 2-3 minutes before, during, and then about 2-3 minutes after these catalysts. Can I speak a little bit more to the system that identifies these important points, please? I think, Theo, are you talking about the dynamic pivots? I just want to make sure I'm answering the right question here, or the right data point. So I'll speak to two different systems that identify important areas in the market that pertain to the S&P 500 futures, and the cash index as well, as insofar as the options are concerned. So the SPX options visualizer is going through the S&P 500 cash index options. There's about 10,000 contracts across all strikes and expiries. They trade about 1.2 trillion of notional every day. And that's over twice as much what you see trading across all major US equity index futures in terms of notional. So options really are the tail that wags the dog. They really have become the market. And as a result, I find watching options flow to be invaluable for trading ES, or the S&P 500 E-mini futures contract. So the algorithm that I built looks across that entire options profile at CBOE, and it generates both key levels, and it looks at the two most active call flows and the two most active put flows, and it shows those as well as which one is the most active. So this can help to get a sense as to where there's likely to be support, resistance, and what levels can act as a bit of magnet. For example, if you have the two most active puts trading at twice the volume of the two most active calls, and or in a downwardly trending day, often is the most active of those two put strikes will be a magnet, and price is more likely to hit that strike, particularly as that divergence grows in the volume between the two most active puts and calls. So that's one area we look at very closely is options. The other is looking at price action and volume profile. And I've created a programmatic approach to identify what we call pivots. And these pivots are dynamic because they move based on price action and volume profile. So they can move during the trading day. And they will, if you have enough price action happening at a pivot, it's no longer really a pivot if it's kind of consolidating there and building acceptance there, right? On the other side of it, if you're cutting below it and pushing back above it and not building a lot of acceptance there, then it remains as a pivot. So we have those two that we really focus on as ways to identify key areas of support, resistance, and potentially magnetic influences on price action. In Bookmap on screen, we have the SPX options visualizer, which really focuses on analyzing those key options levels. On the Trader Discord, we also have those dynamic pivots generated programmatically on a stream that's available throughout the trading day. And those pivots are for ES and NQ, but I'm also able to generate them for pretty much anything else that's sufficiently liquid and executes enough volume. So, really good question from my buddy Adrian, who asks, "Hi Mayhem, do you have any suggestions for differentiating heavy volume absorption areas as either reversal or confirmation points?" So, where we're able to do so, I think it's important to try to discern the source of that volume. Like, if we have a heavy volume area and it's happening because you've got really aggressive, let's say, passive iceberg selling into an upward move, then I'd say that it's more of a risk that we're going to have some kind of a reversal there, because you've got a pretty large trading desk saying, okay, enough, we're going to take profits. Maybe even we're starting to build a short into that. But on the other side of that, if you have a heavy volume area that's being built more because of a consolidation, where both parties are just sort of trading back and forth and no one really has the upper hand, I like to look at the markets as a three-way auction. So that's why I say, you've got excess of supply, that's usually a downward trend. You've got excess of demand, that's usually an upward trend. But then you have an area of balance, right? Where both sides are kind of evenly matched. That's what consolidation looks like. And that's more of what acceptance would look like, where you have more of that confirmation pattern building, where, you don't have a lot of passive selling going on into that kind of upward move. Instead, you're just sort of starting to build that area that may become the next area of support in an upward sort of stair step move. Does that help? And on screen, we can see the point of control getting dragged down a bit here. That typically is a sign that's somewhat bearish, just giving you a sense that more and more volume is transacting at lower prices. You've got an opening range so far that's just about 9 handles wide, and we are testing VWAP from below here. And there's some convergence between VWAP and that gamma 3 level, or basically what is the third largest level of gross gamma positioning on the chain. Yeah, you're welcome. Good questions. So That's a good question. Ships asks, on your current screen, what clues would you look for with that big green candle at 9:45? So, the one thing that stands out to me here is that you see these candlesticks below. These are delta volume candlesticks, so this isn't just buying. It's buying in excess of selling. So you can see buyers started to get aggressive on that last move where you wick down and they absorb those sellers. And they're starting to get a little more aggressive here as well. So that would be one thing that would give you a sense of, okay, you're starting to see buyers show that they are interested in trying to make a push here. Now, the way that I like to look at this is I'm still looking for that 20-minute opening range to form. We've started to push towards what's become the top of that range so far. But in order for me to get a sense that buyers really have the upper hand, at this point, I want to see two things. Okay. So, first, I really want to see a 20-minute opening range formed and buyers pushing above it by excess of 4 or 5 handles and building acceptance there for at least 5 minutes. The second thing that I want to see is the options flow confirm that. So right now, the most active put is the most active option on the chain, and it's executing at that put wall level. So I don't necessarily at this point, see that the buyers have an advantage yet based on opening range and based on options flow. So I'd want to see that turn around. I want to see the hot call trading with at least 30 to 40% of excess volume to the hot put, and I'd want to see us pushed above the opening range, built acceptance there, and ready to start moving higher. But I do like that at the very least we're pushing above VWAP, we're pushing above that gamma 3 level, and we're starting to see some of the folks from the earlier session, these delta sell areas on the session volume profile getting a little more offsides if those were sell to open trades. So ships, let me know if that's helpful color for what we're looking at here. Theo asks, have you used Spot Gamma for options data visualization? I've briefly used it, but I started to build my own tools because I really wanted to have a little bit more finite control over what I was visualizing and how I was visualizing it. So I started to build this stuff off my own code base and with a data connection I have to CBOE. And it's kind of cool because it works for, not only S&P and NASDAQ, but the tools on the Discord work for pretty much every optionable stock and ETF that's on CBOE as well. And so we are now at that point where we've formed that 20-minute opening range. Top of that range, 61.33. Bottom of that range is 61.2150. And remember, 61.3250 is also an area where we've seen some interaction. It's a pivot to watch today. I would be more inclined to want to be bullish above that level as well. Yeah, you're quite welcome. And I mean, we can look at it through a different view. We can always go back to the delta bubbles, and you can see the same thing here, right? And a little more of a granular zoomed in view, because we can go very, very deep into the detail here. You can see that there were those larger delta bubbles there as well. So that again giving you a sense that there is some more buyer aggression that happened, basically just after 943 going into that 945, that whole candle. You could see it in the bars as well, but you can zoom in. The nice thing about Bookmap is you can really zoom into the microstructure. Like there's really no other charting software where you could really get this zoomed in, and it's pretty cool just how far in that detail you can go, because if you're a very short time frame scalper, this can be enormously helpful and insightful as well for that sort of time frame. And so we've got just about 7 minutes left on the stream. Remember, at 10 a.m., we have NAHB Housing Market Index coming up. So that would be one reason I wouldn't want to get too aggressive in any positioning, just because even though the event itself is not likely to be a big catalyst, we're trading it on a thinner tape. So we don't know if any other tape bombs may come through that aren't readily absorbed, but it's just good to be a little bit cautious and mindful going into those events. And we'll watch the order book, but I imagine it's going to get a lot darker just ahead of that event. And that's telling you there's just not as much liquidity near where price is trading. So that's a sign to be a little more careful with your trading. Let's also zoom out on the SPX options visualizer real quick. We can see the hot call flow is the most active strike on the chain. So it's not a huge excess to the hot put. That's 3K versus 4K, but it's at the very least giving you a sense that call buyers are outpacing put buyers to some degree right now. So we want to see, again, a push above the top of the opening range, and that hot call and warm call flow continue to build. So, okay, a couple other questions here. Let me make sure I get to these. And Rando asks, do you use TradingView to script strategies or something else? So I am using a couple of different things. I am a bit of I've got a mixed background in finance and tech, right? So I do have some experience. That's one of the reasons I'm lucky that I can kind of build all these tools and other things. So I code a lot in Python. I love Python. And if you have like a desire to learn more about programming, or you have some background in tech, or you're just comfortable with computers, highly, highly, highly recommend learning Python. I think it's the most valuable language to learn as your first, or just if you're getting into trading, because the nice thing is there's all these libraries out there that are free that you can utilize. You don't have to reinvent the wheel to do things, right? Process data, create charts, be able to automate things. There's just a Python library for almost everything you can imagine. So for folks that really want to get into the nitty gritty, and they're looking at back testing or building strategies or automating or otherwise, I'd say, look at Python as the end all be all kind of best way to do it, with the maximum level of flexibility, but also the highest learning curve and the highest level of effort necessary. Now, if you go to the other side of the spectrum, there's great pre-existing platforms that you can use. TrendSpider is one that I really like a lot for creating backtests, for automating strategies, for creating alerts. And they have a really, really solid platform for that. And in fact, you can get up to 75% off of TrendSpider. Just use the link on my Twitter profile. The sale ends tonight. But yeah, Python is where I would start. And then TrendSpider is sort of like if you're not really wanting to learn how to code and get really into the weeds with this stuff, that's what I would look at for doing more of the kind of strategy testing, back testing, automation of analysis, things like that, alert generation. And Theo says, and then goes on to ask, thanks for the info today. This was my first time tuning in, but the way you explain things is very simple, and I really appreciated the lesson. Well, you're very welcome. And he asks, any tips for someone just starting out? Yes. So the first thing that I would say is really, if you're just starting out, don't necessarily rush to trade your own capital. Try to figure out first what actually works for you and your personality. You may find it's day trading, you may find it's swing trading, you may find you're more calibrated for investing and stock picking. There's like everyone's a bit different. So the first thing I would do is figure out what are your goals, what do you hope to get from trading or investing, and then start to get a better sense as to where do you sort of psychologically have an edge? Where are you best suited to participate in the markets? Now, on my YouTube, you can check that out. It's youtube.com/@mayhem for markets. There's a video called Trading Psychology 101 that I suggest everyone views at least once a year, that I put out there about this exact topic. Really, like, how do you get to know yourself as a trader? How do you get away from some of the bad habits that can hurt us? And how do you lean into discipline and consistency and finding your success? The biggest thing I would say, Theo, is be patient with yourself. This is a marathon, it's not a sprint. You need to make sure that you give yourself plenty of time to learn, become comfortable. Don't get too concentrated and too leveraged up in any single position. Make sure whatever you have on is something you're comfortable sleeping at night with. And if you have trouble sleeping because of your portfolio, you're in too much size. But check out the Trading Psychology 101 video and get back to me. Anyone who's watching, y'all are always welcome to reach out to me. My email is mayhem@traderaid.com. And I know that folks may have questions. They may have other things they want to discuss. So reach out, and happy to help you on your journey, whatever way I can. So average swing trader, I think that's the rest of your name. I'm sorry if I didn't get it. Yeah, average swing trader. Cool. Sorry, it was cut off in the chat. Yeah, so there's going to be a recording of this on my Bookmap and on YouTube. There's just like, if you go to either one and you go to the live section, you'll find it. And then also in this video, the one you're tuned in on Twitter, this is also like going to be recorded and available later. But I think it'll be easier for you to find the exact timing of where it starts and ends if you go to either the Bookmap YouTube or my YouTube. Look under the live tab and find the last video called Back to the Futures. That's going to be the one from me. That's going to be this specific stream. And I do a lot of educational content, so feel free to check out anything else on my YouTube. And if you want to learn more about Bookmap, they've got a lot of other great educators on there that do live streams and videos that are pre-recorded as well. So folks, that's going to do it for me today. If you enjoyed the stream, give it a like, subscribe to my YouTube, to the Bookmap YouTube. Give me a follow on Twitter if you aren't already. If you'd like to check out what we're doing at TraderAid, visit traderaid.com. You get a 5-day free trial of our Discord. And if you want to get up to 40% off of Bookmap, go to traderaid.com/bookmap. That's traderaid.com/bookmap. Scroll down to the special offers. And if you want to check out the SPX options visualizer, it's at the promotional price of $39.99 a month right now through the end of the year. Lock in that price for the lifetime of your subscription before the end of 2024. You can learn more at traderaid.com/SPX. That's traderaid.com/SPX. Thank you so much, everyone, for tuning in. I appreciate each and every one of you. I'll be back Thursday at 9:30 a.m. for my Morning Bell Mayhem stream.